So today I'm going to make a quick video for you guys telling you that I have completely sold out of this position. I have sold every share in this stock, and I don't normally update you guys this quickly on the YouTube channel. Normally you have to be on Patreon to know these quick or these recent updates that I made into the portfolio. I won't tell you exactly which stock I have replaced with though, because I have bought a brand new stock. Unfortunately, you'll have to wait for the end of the month until you find that out on the YouTube, unless you are on the Patreon. But I told myself I wasn't going to do it, but I am going to do it. Tesla, I've just got to quickly talk about it. And yesterday, after making a 4-minute segment on the yesterday's video talking about Tesla, I saw the comments once again, people defending Tesla, and I have my head in my hands going, you guys are crazy. Like, honestly, I start seeing like it has a cult following. Like this stock could say, yeah, we're going to go bankrupt tomorrow, and there'll be people in the comment section still defending it going, yeah, but it's part of the long-term game plan. It's absolutely crazy. Obviously, Tesla, we saw them miss deliveries yesterday, and it missed by a massive amount. Even the most bearish people, it was below their expectations, and the gap between deliveries and production was even more worrying. I mean, that's going to end up with big price cuts coming once again this way, and I just don't know how people are still defending these numbers. Tesla stock is in a horrible place, but yet people still defend it, and it's crazy. And I don't know if this all comes from Elon Musk, and Elon Musk putting things out going, calling people idiots and saying, oh, but look at BYD, their sales dropped by 42% by the last quarter. And it's like, they didn't though, did they? Because, yeah, quarter over quarter, but you're doing different time periods. Like, you're going from one of the busiest periods in Chinese car sales to Q1 when you've got the big holiday season and no one buys in the first kind of couple of months of the year. It just doesn't happen. So you're comparing different peak periods. That's why you do year-over-year comparisons. It's absolutely insane. When you actually look over year-over-year comparisons, they grew 14%. That's what you compare to. You can't start changing the numbers to make it look a bit better. That's the big thing. Look at Ford. Even Ford were up 6.8%, and that, you know, even Ford are beating you. So I think people just get blindsided by Elon Musk sometimes posting stuff out, going, yeah, but this happened. No, compare it apples to apples, not apples to oranges. And I think that people have sometimes or have been sucked in by this in the last few years, where they look at Tesla, for example, and Elon Musk came out only 3 years ago, said, yeah, we're going to grow 50% year over year, and it's like, we haven't, since that time frame, we've gone totally in the wrong direction. We haven't even got close to that sort of direction. And I think people sometimes get suckered in by this kind of fake, or, I mean, from a CEO point of view, I mean, he's doing a brilliant job of protecting the share price, but people just can't see past this, can't see past that he's doing this to protect the share price. Look at the numbers. And I think even when you look at some of the influencers out there, that are promoting about Tesla, I think even them, you know, maybe some people are just getting clouded by them going, oh, don't worry, keep buying the dip. You know, people have been saying this since Tesla stock was $400, and it's now down to $167. No wonder the people that have been pumping up Tesla since $400 have disappeared in the last 24 hours, not posting any videos, because even they're going, actually, you know, these numbers are actually getting quite bad here. And probably the reason why they're not posting any videos is because, once again, they're going back on old videos and deleting all the videos from that time frame, so they don't look an idiot themselves and can call other YouTubers idiots, and deleting their 10 stocks to buy in 2021 videos and deleting them. That's what probably a lot of these people that have been backing this Tesla stock since $400 are doing. I mean, I saw this one the other day from Jeremy Financial Education, and oh my days. Even for his levels, this was crazy. So he tried to justify the numbers being good by saying, oh, look at 2019. This quarter, they've actually done more deliveries than what they did for the whole of 2019. That's how they're trying to justify it. Look, it's still more than when it was in 2019. They're having to go back to 5 years ago to go, look, it's still higher than 2019 to make it look like a good business. I notice this so much with a lot of these Tesla shareholders or people that make content on Tesla, is they don't actually look at the numbers. And I've been saying this for the last year. I've been making videos on Tesla for the last year saying this company is in major issues. And what none of them seem to talk about with this stock is that the problem is that you're a business that's trading at 40 times earnings. You're a business that the profitability is going down. The revenue isn't growing. And this has happened for nearly 2 years now. Now, it's the basics of investing, guys. If you're trading at a premium valuation and your profit and revenue is not growing, and in fact your profit is declining, and your revenue is flat, your share price will not do well, especially if you're trading at a premium like Tesla is, which it is at the moment. Your stock will not do well. And it doesn't take a genius to realise that. That's why in the last year, or year to date, Tesla's down 32%. Because Tesla was trading at 70 times earnings, and yet there was people on the YouTube saying, don't worry, it's all about the long-term investing. Not mentioned at all for the last 2 years, this company's done bad financials. Now, if the company does good financials, the stock will go up, as long as it's trading at a good valuation. But at the moment, the financials are not improving. This has been 2 years of these bad financials. The only way these financials are going to improve is if we head into a lower interest rate environment. And at the moment, are we anywhere near a lower interest rate environment? No. I just don't understand how people keep falling for this stuff that Elon Musk keeps putting out. And obviously he's doing a good job of protecting the share price, but it's so obvious he's doing it. He's telling, little porkies to try and keep that share price up. So these content creators that don't ever mention why the stock has performed badly. Oh yeah, it'll be all right in the long term, buy the dip. And yet it's down 32% year to date. Look, I see none of them mentioning the valuation and the current financials and the big decrease in profitability that's gone on. Absolutely crazy. And I saw that in some of the comment section yesterday. I was like, how are you guys still having the wool pulled over your eyes here? Anyway, this wasn't supposed to be a video on Tesla, but you get me going on Tesla, that's what happens. Anyway, on the Patreon, you guys on the Patreon know which stock I have bought to replace Flutter. You guys on YouTube, you'll have to wait until the end of the month to know which that stock is. If you do want to know which stock that is, you can join the Patreon, £5 a month. But I did sell my shares in Flutter. I took around about a 34% gain in this stock, which I've held for around about 2 years, which isn't too bad. If someone offered you 34% for holding a stock for 2 years, I think you'd probably take it. It's near what I was kind of hoping for. It would be more towards my expectations if I sold before this drop-off earnings. So maybe I should have sold it a little bit earlier. Now, obviously one of the reasons why I sold Flutter, and if you watch the UK portfolio review that I did the other day, one of the reasons I sold Flutter is that I just didn't have enough position built up. For me to buy Flutter any more shares, I would want it to be probably 30-40% lower than where it is right now. So yeah, it looks like it's probably not going to get there. So I wanted to build this position up more than what it was at, and it looks like it's not going to happen. So that was the first thing, is that I wasn't able to buy more shares than what I wanted to. So not getting that position built out and sitting on a gain, that was one of the things that was a big contributor. Next thing is just comparing it to the other stock. So the other stock that I bought is very similar. In very similar industries, so I didn't want to cross over too much. I don't want to be too exposed into that industry. The one that I have bought has that little bit more, I'd say, risk element to it. With Flutter, I've already got good exposure through DraftKings though, so I'm kind of covered in that space, and I like DraftKings more than Flutter. That's why I've got more money in DraftKings than Flutter. But as well as that, the valuation, the company currently doesn't make profitability. When they do go back to profitability in a year's time, then we're going to be talking about a company that's trading 30 plus times earnings. The one that I've just bought is actually 16 times earnings, so it's a lot cheaper on the valuation. From a growth point of view, the company that I've just bought as well is growing faster than what Flutter is. From a profitability point of view, the company that I've just bought is generating more profitability, has better profit margins, and the profitability is growing faster. So the valuation is better, the growth faster, bigger profit margins, and profits growing faster. So that's a big combination of things. And also on the balance sheet wise, the company that I'm buying has a clean balance sheet. There's no debt on the balance sheet. This company does sit on 62% debt to equity, which is pretty heavy. You look at the cash pile, they've got a decent cash pile to the debt, so there's not an issue there, but they have that kind of debt to pay off at the moment. The company, like I said, the company that I don't that I've just bought to replace it has currently got no debt on the balance sheet. It has plenty of cash. It's generating more cash than what Flutter is, and that's probably going to lead the company that I've just bought to have the opportunities to deploy that cash through either share buybacks or dividends. So me as a shareholder, I'm probably going to get rewarded a lot more because of the cleaner balance sheet from the company that I've just bought. So yeah, that's the reason why I sold Flutter. Obviously, another nice profit made on this stock. But like I said, the main reason I did sell is that I just didn't really have the allocation that I wanted to, and it was quite far off me where I wanted to buy more. I also own DraftKings, and also the stock that I bought is very similar. I couldn't have another stock in the same sort of industry as this added in. We've already holding the likes of DraftKings, for example. And overall, like I said, valuation it's better, balance sheet it's better, growth it's better, profit margins it's better. It just looks a lot better opportunity. It's a smaller company than this one, so there's that kind of more risk element there that it's a lot more in its early days compared to the likes of Flutter, for example. But yeah, I thought it was a very good switch. Like I was looking at it for the last kind of week, and I went, from every point of view I look at, the business that I'm looking to buy is better than Flutter. So I have to do it. It makes sense from an investment point of view, and then that's what I did. So yeah, I did decide to sell out the shares of Flutter, and like I said, I'll update you guys with the new stock in probably 3 weeks time, 4 weeks time. So yeah, keep an eye out for that one anyway. Hope you enjoyed it. See you in a bit.